Hello, everyone, and welcome you back to our webinar series. My name is Viktoria Soltesz, and this is hosted by the Soltesz Institute. And I'm very excited for today because we've got Mahmoud with us, who has a really huge experience in payments, and he's going to share all of that with us today, as much as he can. Of course, our time is limited, but that he's got a lot of experience around different issues in payments and banking, and that's why he is the best person to go to when it comes to understanding payments a bit better. So today we are going to talk about Payments 101, what we need to know about payments, and we have a lot of different topics. Well, we collected some questions from the audience as we do usually before the webinar. So we have a nice skeleton for the conversation. We are going through all of them one by one, but the topics will include a lot of different aspects of payments, why payments are so expensive, what are the regulations around it, and what are the alternative payment methods we have other than cards. So I'm super excited. Thank you very much for joining us, Mahmoud. Please tell us a bit more information about you and how did you end up in payments?
Yeah, thanks. Yeah, payments is the hot topic, Victoria, everywhere now. Yeah, it becomes part of our daily life, and everyone now is involved in the payments, either directly or indirectly. So yeah, I'm Mahmoud Ismail. I'm the Chief of Staff and the Head of Acquiring and Payments for ADIAN in the MEA region. 20 years in the payments industry as of today. Ended up in payments in 2011, where I got a task from my leadership team that time in Egypt to build the first classifieds portal, which includes also a payment channel for the classifieds. That was the entry into the field and to be directly involved in payments. And then I joined an e-wallet company, then joined the largest acquirer in UAE, which is Network International. Then, with the entry of ADIAN in the region, I was lucky to be part of the founding team on ground. And this is where we are today.
Nice. I'm really looking forward to tap into that knowledge that you have around payments. So let's start immediately. Let's jump in. So tell us, okay, we see a lot of different flow charts and explanations about how does a typical card transaction flow look like from start to finish. But please tell us, because I think it's still a bit unsure for many of us, that what is the purpose of the acquirer? What is the purpose of the gateway? Is the acquirer the gateway itself? Who are the card schemes in the middle? And why does he have to go through so many layers, which are so many opportunities for failure?
Yeah, let's first define the ecosystem players, as you rightly pointed. So the card network, which is known to anyone, like Visa, MasterCard, American Express, and many other card networks, and there are others as well in different regions. And then it comes the issuer, who's issuing the card for the card holder or for the end consumer, whether it's an individual or a company. It can be also a corporate card or a consumer card. Then there is the acquirer, who's linking the whole ecosystem together, which is us in many regions. So ADIAN is operating globally in more than 65 markets as an acquirer, and also expanding to other areas like as a bank and as an embedded finance provider in other markets. But here, the focus on UAE, we are providing acquiring services, which is mainly linking or connecting the dots between for the journey of the transaction among the cardholder, the issuer who issued the card, and as well as the card network, which is Visa, MasterCard, or other card network. So simply, the role of the acquirer is to make sure that the transaction which is being sent to the issuer is following the local rules, regulations, is following the scheme rules, which scheme is the card network, Visa and MasterCard. It's an industry terminology. So this is the role of the acquirer in between. Plus, the acquirer is definitely the main point of contact for the merchant, which is enabling the cardholders or the consumers to buy from this merchant using the card, whether it's in-person payment on the POS machine, the point of sale, or through online, the mobile payments, mobile SDK or mobile application, or the website. These are the parties of the ecosystem which are helping the merchant to serve the consumers, okay, to accept payments. Now we go to your initial question about how a typical card transaction would flow. Definitely a typical card transaction unfolds swiftly and securely in several key steps. So it begins with the consumer initiating the transaction, which means I'm visiting a store or I'm visiting a website and buying something. So I'm initiating the payment from my side through this payment gateway, which securely captures the details of my card, which we call a PCI environment, which we will also define later. But it captures the card details, sending the transaction to the issuer who issued the card, which connects with the card network. And definitely the transaction goes all the way back to the acquirer and to the merchant, confirming the transaction is successful, so the product or the service can be released.
Right. What are the different other players? I don't know, the gateway, because a lot of people, when they open a merchant account, they hear that there's a gateway in the middle. Also, how these card schemes are getting involved in the whole process. What are their responsibility? Can you tell us a bit more? Because I think these details are super interesting.
Yeah, of course. Definitely. The card network, it acts as the switch forwarding the request to the issuing bank. So which is the customer's bank, and the issuing bank verifies the cardholder's identity, verifies the cardholder has the right or sufficient funds available for this credit transaction, and approves or declines the transaction. After this, the authorization response travels back through the card network to the acquirer and finally to the merchants, whether it's the point of sale or the payment gateway, informing them whether the transaction is complete and the process is approved. So if approved, the merchant fulfills the order. Subsequently, the acquirer will initiate the clearing and settlement, which we will explain in a later stage, where the funds are transferred from the issuing bank to the acquirer, and then the acquirer will credit the funds to the merchant.
Clear. All right. And when we are talking about card payments, I think everybody knows how to use card payments because majority of use the card payments, but there are some other alternative payment methods as well, what we call alternative to the cards, but they are very popular in other parts of the world. So can you tell us what are the main types of payment methods and what are their pros and cons? I mean, obviously, we don't have the full year to talk about it because this is such an extensive topic. But what are the main ones that you think that we need to really highlight here?
Yeah, let's go through this, navigate through the question in a quick way. So the payment landscape is diverse, 100%. Let's be generic at the beginning, then we can narrow the scope to the local market of the UAE. So it's offering various methods to cater to different needs and preferences of the consumers and the merchants as well. So definitely what's known to everyone, the credit cards, which is almost with every person in the country. So it directly offers convenience and often rewards program. This is what attracts consumers or card holders to obtain credit cards because of the loyalty or rewards programs linked to it. However, they can come with higher merchant fees on the merchant side and the risk of chargebacks and disputes. That's just a very quick pros and cons, but its credit means the money doesn't exist, so it's within the limit allowed for the cardholder to spend. The other type is debit cards, which are directly linked to the bank account of the consumer, so it's connected to real money. The money exists already, offering a sense of spending within limits, which are the limits of available in the bank account indeed. They typically have lower merchant fees, and this is currently regulated as well, as the interchange of the debit cards is something regulated in the UAE than credit cards, but may have daily spending limits from the issuer side. And 100% it comes to the digital wallets, which is highly trending, not in UAE only, this globally, which is Apple Pay, Google Pay, Samsung Pay, enhancing security through tokenization and offer streamlined checkout experience as well, because the adoption rate vary, and they rely on underlying funding sources like card or bank accounts also can be linked to it, but it triggers a lot of attraction for the convenience and easy to use it. The very traditional way, bank transfers, is the other option, which is just direct debit from the bank account. So definitely suitable for large transactions. That's more convenient for the corporate or business to business, we call B2B, and recurring payments as well, often with lower fees, 100%. However, they can be slower than card payments and may carry a higher risk of insufficient funds as well. But the fee of the transaction or the cost of the transaction is lower. And for the individuals or the consumers, it's not that attractive because it's spending from their real money. Plus, there are no rewards programs linked to it. The other option, which is, it has increased in terms of usage a lot in our region in general, the MEA region, which is buy now, pay later. The BNPL model offers flexibility for consumers to spread out payments. Merchant may incur fees, but there are potential risks associated with consumer debt. It should be managed by the BNPL provider anyway. And the last one is the king. Cash is the king, or was the king, because now the adoption of digital payments is increasing massively, which is adopted and also secured in the UAE by the regulations, which are boosting the usage of the digital payments. And definitely when we talk about the UAE, we are talking about the most innovative market when it comes to the payments landscape in the region. So this is just a summary of the payment methods which are being used globally and in the region as well.
What do you think? What's the most popular in the region? Because, for example, in Europe, not that many people have credit cards. We do have debit cards, but when we need to rent a car, we sometimes encounter a problem because credit cards are most popular in North American region mostly. What do you think in the region out of that? I mean, I understand that the cash is still the king there, but all of these digital ways of payment, what is the most popular? Where do you see that the future is going to be when it comes to these payment methods?
Yes, still definitely. It depends, by the way, industry by industry. So in some industries like the lodging and hotels or hospitality, you will find higher usage of the debit cards, while in the dine-in and other verticals like entertainment, you will find a higher usage of credit cards. And again, we will go back to the point of rewards and the reward programs linked to it. So it's a bit balanced here in the region, the usage between credit and debit cards. But definitely the future is going into, if we call it the crypto payments, blockchain payments, which is still happening slowly in the region. But definitely this is the trend now globally. And I think that UAE was super proactive on this, having the regulator VARA, which is already established to regulate the payments through the digital assets and the crypto and blockchain.
Right. And is it the centralized version of that, or is still the decentralized crypto? So are we talking about maybe, central bank digital currencies, or you think that crypto is going to be the way with the decentralization functions?
No, indeed, the CBU is very much steps ahead on the digital currency of the UAE, which I think the first initial launch is already happening as we speak this period. So I believe it will be the future in the UAE to pay with the AED digital currency of the central bank.
Nice. I'm looking forward to see that working in real life. I know because the region is really far ahead with all of these banking innovations. And I think this is a great sign that the region is really getting involved in the digitalization and the government is really supportive. So that's when beautiful things happen, when the private sector meets the regulator and they together work on making things so much better. So let's go back a bit more about the regulation. So you mentioned earlier the PCI DSS, which is the main regulation, just a description of how card payments should take place and when it comes to security and safety, how it should be handled. But this question is really about what is this PCI DSS? What does it stand for? And why is it important when we are talking about card payments?
Yeah, okay, that's a very good question. So definitely the major concern of any cardholder or any consumer is the security of the transaction that's being executed by the cardholder, because it's the cards and the fraud is everywhere now, and they want to make sure that the channel or the instrument that they're using is secure enough to safeguard their money. So the PCI DSS, it stands for Payment Card Industry Data Security Standards, which is a set of security standards designed to protect the cardholder data. So compliance with the PCI DSS is crucial for any entity that handles card payments and card information, including merchants, including payment processors, and the service providers as well. So it's important, stems from several key factors, which are: first of all, preventing the data breach. So the standards within the PCI DSS significantly reduces the risk of costly and damaging data breach or safeguarding sensitive consumer information. Secondly, maintaining customer trust. So demonstrating the PCI DSS compliance builds trust with customers, assuring them that their payment data is handled securely and in the right way. Definitely another reason, avoiding penalties. So the non-compliance can lead to significant fines, legal prosecutions, and reputational damage from card networks and regulatory bodies as well. This is other than the liability on the acquirer and the merchant towards the cardholder as well. So another reason, also ensuring business continuity, because by protecting payment systems, the PCI DSS as well helps maintain the ability to process transactions and sustain business operations. And foremost, industry mandate compliance is often a contractual requirement from acquirers and card networks, making it essential for accepting card payments. So in a summary, to be able to process, save, transmit, or store card data, you need to be PCI DSS compliant.
I remember a long time ago, I was going to the gym, and while you're waiting, you just see what's happening, how the receptionist lady is working. And I noticed that she had this little notebook with the client names and card numbers, and she was passing it through every month as a recurring payment for your monthly membership, right? And all of those data was kept in a simple notebook. And that's when you realize that, yes, even though that there is a regulation which is intended to do the right thing and make sure that all the data is secure, but we still need to talk about it and make people aware, because maybe that receptionist lady at the gym is not aware what is PCI DSS. So why is it so important to protect customer data?
I want to surprise you and tell you that there are still some places are collecting the card data from the consumers. And what I wonder more about, that the card holders are simply giving their card data to the place or to the store, which is definitely a very insecure way to handle the card payments.
Exactly. And I think that was the reason that, PSD2 came out with this multi-layer verification, that just by someone having your card details still won't be able to charge your card whenever and however they want. You still need to secure it with an extra SMS or an email. You have to click on an extra button just to avoid these scams. But unfortunately, these scams are still very common.
Yeah, because it doesn't only have implications on the card holder, it's on the merchant as well. Because for me as a card holder, if my card got charged without the authentication from my side, then I can easily dispute this transaction and I will win the dispute. So it's that the merchant also is losing money.
That's right. And I was even so surprised that so many people don't even know that once the card payment goes through, you can dispute it. So still a lot of people think that once the money is gone, it's gone forever. So again, it's a massive part of education. Exactly. At least that's a good thing. So that's one of the big things of the card payment. But I think that's why card payments are so expensive, right? Because these are all of these built-in security systems and making sure that I am under safety and I am secure as a consumer. But what are all the fees? Because to be honest with you, card payments can be really hefty. How are these payment processing fees calculated? And what are the various fee components? What is eating up all of these fees when I'm paying with a card to the merchants?
Yeah, the $1 million question, and a very hot topic for all of the merchants across UAE. So yeah, definitely the payment processing fees are calculated based on a combination of factors. So ultimately determining the cost of a merchant to accept electronic payments. So the main fee components are typically what we call interchange fees. These are fees paid by the acquirer to the issuing bank for each card transaction. They are usually a percentage of the transaction amount plus a fixed fee and vary based on a card type, card channel, or it's in-person payment, it's e-commerce, it's debit, it's credit, it's prepaid. If it's e-commerce, is it 3D secure or authenticated transaction or not? If it's in-person, is it contactless payment or the card inserted into the machine? So all of these variables impact the cost of the transaction. The other cost, which we call assessment fee or the scheme fee or the card network fee, these are charged by the card networks, like similar to Visa, MasterCard, American Express, and other card networks, to the acquirer. They're usually a small percentage of the transaction volume. And definitely ending up with the processor markup. This is the fee charged by the payment processor or the acquirer in our ecosystem to the merchant for their services, which can include transaction processing, gateway services, fraud monitoring, customer support. All of this is blended in one fee, which we call the markup or the margin of the acquirer. This markup can be a percentage of the transaction, a fixed fee per transaction, combination of both. It depends on the business model. There are a lot of models in this regard. So the final processing fee a merchant pays is typically a blended rate on an interchange plus the rate, which we call in our world interchange plus. So interchange plus assessment fee or scheme fee plus the margin or the markup of the acquirer. The blended rate combines all of these fees together, all of the components, into a single percentage and pre-transaction fee, offering simplicity to the merchants. An interchange plus model provides more transparency by explicitly stating the interchange fee, assessment fee, and the processor's markup separately. This understanding these components are really crucial for the merchants to effectively manage their payment processing cost. This is why Adyen is operating globally. The platform supports the interchange plus model, which gives a very high level of transparency to the merchants. So if I'm the merchant, I know exactly what went to the issuer, what the scheme has charged for this specific transaction, and what's the margin has been charged by the acquirer.
And I think you can make decisions once you have this payment data, right? So you can encourage people to pay in a cheaper way if you're a merchant, if you have all of this information in front of you. Because once you have a blended rate, every card is being processed on the same fee. You know, you don't really have any kind of motivation or any opportunity to reduce those fees. But once you understand what is interchange, and yes, it sounds plus, it's, you know, when you're a merchant, you're freaking out, plus fees, plus. But in this way, you have the opportunity to identify in your payment data that what are those payment methods which are costing you the least amount of money, and maybe put a little marketing around it and a bit of awareness. If you're paying with a personal Visa credit card, is going to be cheaper than a debit card on the company, something like that. That means that you can actually have some effect on how much you are paying. Am I correct?
Of course, spot on. And you should be in the payments industry, Victoria. So indeed, 100%. So that level of granularity and the reporting or the insights that's being provided on the interchange plus model, it helps for the decision making from business perspective for the merchants, because I can easily understand where the spending is going on at my stores or on my website. So I can easily put promotions or offers towards, if I see that the cost of payment for debit transactions is less, I can promote this. It helps a lot giving insights and helps in the decision making for the merchants. Whereas my next store and how this store should cater for the payments and how this store should help not only the consumers to pay easily, but help the company itself to make the cost of the transaction less by opening in an area where debit cards are mostly used. Things like this, just examples.
And I think these fees are also covering some kind of elements of risk, right? Because at the end of the day, there are so many creative individuals out there trying to cheat the system, trying to commit scams. So not only the card schemes, but also the acquirer needs to make sure that whatever amount they are accepting from individuals through the cards or in any other payment method, that it's coming from legit sources. It is indeed not subject to tax evasion. So there is some kind of like security elements in that, right?
Indeed, and it's a good point. Let me split it into two parts, because a lot of merchants and the consumers are mixing up between the risk module and the authentication module. These are two completely separate things. So if the merchant is enabling the 3D secure, which is, just to make it simple, the OTP or the one-time password that you're receiving on your mobile to complete the transaction, this is not the security of the transaction or not the risk handling of the transaction. It's authentication only to make sure that the card holder, herself, is making this transaction. But the risk factor and the transaction and how this transaction being scored in terms of the risk level for the merchant, that's a completely different module. And if the acquirer is not providing enough insights about the transaction and the right tools or the right systems offered to the merchant, then the implications can be significant for all of the parties of the ecosystem.
Wow. I think the next question is relating to this very well. What are the key risk management considerations for merchants accepting those payments? So you as a merchant, how can you filter out all of those wrongdoing, or if someone wants to do money laundering through you? And what is your responsibility, and to what extent you have that responsibility? What are the parts when you can say, it's not my responsibility, I didn't know? Or can you even say that?
Yeah, see, this is why selecting the right acquiring partner is super important, because it's not a one-man show. It's not something that the merchant is solely responsible for what's happening. No, there are other parts in the ecosystem, and they should help the merchant achieve the business goals as well. So merchants accepting payments face several key risk management considerations to protect their business and consumers. So this include, for example, the fraud prevention, implementing robust fraud detection and prevention tools such as the address verification service, the CVV, to make sure that those 3 secret digits on the back of the card are being checked correctly, and fraud scoring systems. This is essential to minimize fraudulent transactions. Definitely following the data security, which we have spoken about, the PCI DSS, to avoid any data breach or the payment data leaked to fraudsters. So adhering to the PCI DSS compliance and implementing strong security measures, including encryption and tokenization, is paramount to protect the sensitive cardholder data from breaches, which gets, again, all of this can be enabled through choosing the right acquirer. So you need to have the acquirer who have the right product or platform to offer the security level desired by the merchant and the consumers. A tokenization service. Now we have the network tokens, which are not only giving uplift on the acceptance rate, but also it's more secure for issuers and for the consumers. Chargeback management is another point. So establishing clear transaction processes, providing excellent customer service, and having effective dispute resolution mechanisms are crucial for minimizing and managing the chargebacks. Regulatory compliance, very sensitive and important topic. So staying informed about and complying with the relevant payment regulations, such as data privacy, data protection laws, and anti-money laundering, which we call AML in our industry. These requirements are vital. Operational risks, ensuring the reliability and security of payment processing systems that you're partnering with, again, going back to the right acquirer, and having business plans in place to handle potential disruptions. Foreign exchange risk, you need to have the right partner for you to manage the currency fluctuations and with the associated fees to it. Dealing with international payments or cross-border payments, we call it, is a key consideration for businesses with global reach, because if you're in the business or a vertical like hotels or hospitality, you will expect higher international transactions. So if you don't have the right partner, the implications can be significant as well.
That's true. And I think you mentioned a very important part, which actually happened to me as well. The fraud detection levels set to the correct way, because I'm traveling a lot. And obviously my address is registered to Cyprus. So every single time when I'm using the card outside of Cyprus, I encounter some kind of problem, because how comes that you're purchasing something from Germany with the Cyprus delivery address? Maybe it's a scam, maybe it's something wrong. So oftentimes even genuine transactions can be filtered out by the wrongly set fraud systems. And I think this is, again, a part when merchant can lose so much money if they are picking the wrong acquirer, right?
Indeed. That's exactly the very good example for what we are saying. So there is the machine learning part of the business on the acquirer side can help a lot. Rate or score, give a score, risk score to this transaction or to this shopper for the merchant to make the right decision. Should I go with this transaction? It makes sense. What's the history of this card? What's the history of this merchant with me? What's the history of this destination of the delivery? So all of these combination of data insights helps from the risk module perspective to manage the transaction or the acceptance of the transaction in the right way.
In case one fraudulent transaction goes through, what is the responsibility for the merchant and what is the responsibility for the acquirer? Do they share these responsibilities, or they can just point to each other that you let the payment through, dear acquirer, or the acquirer can say that, but you merchant should know that this client shouldn't pay you in the first place? Like, how these responsibilities are shared?
Yeah, definitely. If you have the right partner, the right acquirer, they should help you on these cases, because investigating the case, and if the systems are smart enough to detect the fraud, it will be prevented at its root. But let's say the fraudulent transaction went through, there are a number of measures, because the acquirer should take an action towards this through the rails of the card networks. Let's say it's a Visa fraudulent transaction, so that there are channels and there are ways to report this transaction through the card networks, and this shouldn't be delayed, because there is also a time frame to dispute a transaction, which should be respected by the merchant, the consumer, and the acquirer as well. The system, again, the right system, the right partner in place, they should help you defend the chargeback cases or the disputes. And Adyen does this in a very smart way, in a perfect way, where our systems can defend the chargeback or the dispute cases automatically for the merchants without manual intervention. Some cases it requires manual intervention, but in general, the system is smart enough to defend these cases.
And I think this is also a huge benefit when you're using cards and digital means, because these are traceable, other than people are coming to you with a big bag of cash that I want your best service or I want your best product, all of it. And then you don't have that partner who is helping you to filter out if the transaction is indeed legit. Because if I'm a merchant, I might not have any kind of financial knowledge. I might not even know how this card system works. Why should I? I might be just a good baker across the street. So I need some kind of reliance on a good technical partner who has the capabilities to filter out these fraudulent transactions, who are helping me also to grow my business through these payment methods. Let's see the other question, because I think it's very interesting to make a differentiation between online and offline payments. What are the differences and how does the acquiring process differ from online and in-person transactions? I'm talking about the POS machine or even, the cash transactions. But when we are talking about acquiring process, is it just not the same? I'm paying them in the local system or I'm paying them online. Does it really matter where I am?
No, it matters because, previously they were calling it online and offline, which is not specific enough, and it doesn't. And also with the development and involvement of the payments industry, we cannot call it even card present, because with the spike of the digital wallets, it's still going through the POS or the point of sale terminal. But this is why we are calling it now in-person transaction or customer present transaction. So in this case, definitely these typically involve either physical card or digital wallet, but the person is making the transaction in person. The acquirer often provides a merchant with a point of sale hardware or software, maybe for the soft POS. The transaction data is captured through the card reader or the payment terminal. Again, chip and pin or contactless, and transmitting directly to the acquirer via a secure network connection between the terminal and the acquirer. Authentication often involves PIN entry or signature if the transaction exceeds a specific amount, but below that threshold, the transaction will go through without authentication as per the scheme rules. So that's for the in-person, and definitely it's not like an online transaction or e-commerce transaction, because, by the way, the transaction or in-person transaction on the point of sale is also being sent online, as the term online. But the differentiation is in-person transaction and e-commerce transaction or mobile application transaction, which these occur in a card or customer not present environment. The merchant integrates with a payment gateway, which acts as a secure intermediary between the merchant's website or application for mobile apps and the acquirer. The customer enters their card details directly on a secure payment page, following the PCI DSS standards. It may include CVV verification, which is the customer value verification, which is the 3 digits on the back of the card, and strong customer authentication, which we call SCA, which is very popular in Europe and specific following the PSD2 regulations. And the payment gateway encrypts and transmits the transaction data to the acquirer, and then it follows the journey which we have explained at the beginning of the webinar.
And what's the situation with the crypto? Because crypto is only online, right? That's the whole point, that everything is digital. What's happening when it comes to crypto? Do we make a differentiation between online and offline? Or can we even make a differentiation with the in-person? Because I'm in-person paying with my crypto. What do you think?
Yeah, by the way, crypto is being accepted on point of sale as well now, not only online.
Okay.
Yeah, so people can, or consumers can, pay now with using crypto on payment terminals in some markets. It will happen here very soon, I'm sure. Emerging technologies are definitely poised to significantly reshape the payment ecosystem, which you're talking about blockchain, while still in its early stage of widespread adoption for mainstream payments globally. But blockchain technology offers the potential for decentralization, transparent, and potentially lower cost payment solutions, maybe. Cryptocurrencies built on blockchain, the cryptocurrencies are using the blockchain technology in general, could offer alternative payment methods, particularly for cross-border transactions. Smart contracts could automate payment processes and escrow services. However, volatility, scalability, stability of these cryptocurrencies, and regulator uncertainties definitely remain key challenges to date. I'm sure this will change in the coming years, but still a challenge, or an area that a lot of acquirers, one foot in, one foot out. The second is the real-time payments, which we call in the industry RTPs. So these systems enable near and instantaneous transfer of funds between bank accounts. They are also enhancing speed and efficiency, improving cash flow for businesses, and facilitating new payment use cases like instant refund or bill payment. So the RTP can also reduce reliance on traditional card networks for certain types of transactions and foster greater competition. So as adoption grows for the RTPs, it has the potential to become a fundamental part of the payment infrastructure, and it's also increasing. It's there in Europe for quite some time, but it's trending here as well in many markets in the country, including UAE, Saudi, and Egypt. They have adopted their own real-time payment networks, which is bank networks connecting the banks together and with the merchants, which we have here in UAE, ANI, we have in Saria in Saudi, we have also Pay in Egypt. All of these RTP networks are essential and crucial for faster money movement at a lower cost.
What do you think? What are the risks of using cryptocurrencies? Because we had a lot of clients who just integrated crypto payment in the mix, mixing it together with the traditional payments, a bit of crypto, a bit of cash, a bit of card payments. But somehow the traditional banks are a bit iffy, because I can trace where the funds are coming from when it comes to the traditional means of card payments and bank transfers. But sometimes, mainly in this area, maybe the crypto is coming from a wallet which was under an anonymous owner instead of being regulated. And now, of course, everything is getting more and more regulated, but maybe that crypto was kept in that wallet for 5 years. No one really declared ownership. Maybe people didn't pay the tax. So what do you think that how you as an acquirer or you as a financial institution have this kind of extra risk embedded in the payment mix?
Yeah, we do not offer crypto payment methods yet. It still needs some time to be adopted globally, and we don't mind waiting for the regulations to be in a shape that's make us confident stepping into the crypto. However, the regulations and compliance requirements are on top of the risks. Definitely, if they are crucial, they play a crucial role in shaping the payment ecosystem, in ensuring that it's safe, stable, fair. So the key impacts would include definitely back to the security standards of the transactions, consumer protection laws. It's still in a very early phase if you're paying or using crypto, if you're adopting crypto as an acquirer. Money laundering, big part of it, big risk within the blockchain and the payments with crypto, as you rightly mentioned. So you don't know, you cannot trace the initiation of this crypto payment, which is a risk. Again, the regulations are evolving super fast in UAE, and I think it will be one of the leading markets to adopt it so quickly and in the right way. Plus the interchange fee regulations, because I can also observe that card schemes are interested to tap into the crypto and blockchain world. So still, I think there is a lot will happen in this area in the coming years.
I think you mentioned a lot of things about the next question, which is how the regulations and compliance requirements shape the payment ecosystem. But let's talk about what is the headache for the merchants? Because yes, of course, we need to maintain a healthy financial system, and of course, we need to filter out the bad guys. But somehow I hear it in the industry that regulation, it's more of like burden, which is hindering innovation. Less regulated financial sectors might grow better, bigger, just because there is no regulator who is keeping their hands tight. What do you think? Where is the good balance between having the right amount of regulation, but not over-regulating or hindering innovation just because we're overburdening the merchants or even the industry with like extra steps that just to filter out this much of criminals for that amount of transactions, we're blocking everyone?
Yeah, let's agree on something, that the regulations are made to protect the whole ecosystem, the consumers, the merchants, the card networks, and the acquirers and the issuers as well. So it's essential for any entity to follow the regulations to make sure that, okay, my rights and my obligations are fulfilled in the right way. That balance and that mix should be adopted by any player in the market. So again, the increasing globalization of the payments present definitely both significant challenges, but I wouldn't call it challenge, it's opportunities as well. So from the challenge perspective, we are talking about complexity of cross-border regulations. So now I'm being regulated, let's say, as an merchant or acquirer in UAE, but we need to initiate payments to other markets, whether it's in the region or outside the region. So navigating diverse and often conflicting regulations across different jurisdictions can be complex and resource intensive, big time. Foreign currency, foreign exchange risks and costs, currency fluctuations, which happens a lot in a number of markets, and high foreign exchange fees that can erode profit margins and increase costs for both merchants and consumers. Another angle also is varying payment preferences and infrastructure. So the adoption between debit, credit, wallets, cash, bank transfers, direct debit, it varies from a market to a market. Different countries have distinct payment preferences and varying levels of the payment infrastructure available locally for the consumers as well. Increased fraud risk. Thus, cross-border transactions can be more susceptible to fraud due to the jurisdictional complexities and the difficulty of verifying identities internationally, especially if you are partnering with an acquirer who's operating only locally. There is no insight or there is no platform that's capable of dealing with multiple jurisdictions. However, if we look from the positive side of it, the opportunities, accessing new markets and new consumers, this definitely is an opportunity for any merchant to tap into net new growth opportunities, increased sales and revenues, which is a very organic result of this expansion. Economies of scale, centralizing certain payment operations, which can lead to cost efficiencies as well. Innovation and knowledge sharing, so exposure to different payment systems. You're dealing here with the local payment, the local switch, and the local payment system. You're dealing with another local payment system in Saudi, in Egypt, in Oman, and Kuwait, and Europe. So this also helps a lot, this exposure. And it can foster innovation and adoption as well. And top and foremost, enhancing customer experience. So offering consumers their preferred payment method and a seamless cross-border checkout experience, it really can improve the satisfaction and loyalty level for consumers.
For sure. And can give less of a headache to the merchant as well to deal with multiple regulation in multiple areas, right? Let's see the next question. We talked a lot about the future, right? So what do you think, what's in the future? What are the key trends which are driving innovation in the payment ecosystem? What's trending? What's in the future? I know that we need to mention AI here, but let's try to think outside of the box, that other than AI, but obviously AI is going to take over everything. Or what are the effects of AI in the payment ecosystem and how we can benefit from that?
AI, I'm hearing this word now everywhere. In every meeting, and it's part of our life, which is, again, there are a lot of positive and pros for having the AI. It helps in many fields, and definitely the medical field, the law field. It's really something great to have the AI adding value to the life of people every day. But focusing or zooming into payments and what drives innovation in the payment ecosystem, we have several key innovative or trends, if we can say. Definitely the digitalization and mobile first approach. Every merchant now, every acquirer, without mobile friendly environments and mobile applications, it's super difficult to acquire or recruit more customers. So the increasing adoption of smartphones globally, which is on top or above 100% usage or adoption rates in many markets. A lot of people have more than one mobile or more than one mobile line. So this is driving demand for seamless and mobile-centric payment experience. Embedded finance, big topic globally, integrating payment capabilities directly into non-financial platforms and applications, just like e-commerce sites, social media, media payments, this offers a greater convenience and sustainability for the payments and within the ecosystem. Contactless payments, big topic. So this is definitely convenient. Hygiene concerns for some of the people, contactless technologies like the NFC or QR payments, which are trending massively globally. It's also increasing here in the UAE. This is gaining significant traction. Personalization and data-driven insights, leveraging data analytics to understand customer preferences and offer personalized payment options and experiences becoming increasingly important in the market, not only in the market, globally, actually. Focus on the security and fraud prevention. So innovation and authentication methods, tokenization, biometric authentication, all of these fraud detection tools are crucial to combat evolving threats, again, globally. Focus on the expansion of alternative payment methods, the rise of digital wallets, which we have spoken about, the buy now, pay later, the BNPL, and potentially the big topic which we have discussed, the cryptocurrencies. This is diversifying the payment options and challenging traditional card dominance. And this is, for example, in Africa, the P2P payments are trending, and the card networks is getting less traction in some markets in Africa. This is something that needs, again, it's market by market or region by region. Regulatory focus on competition and interoperability, initiatives like open banking, big topic in Europe, US, LATAM, APAC, this fostering greater competition and enabling more seamless data sharing and payment flows as well. Something like cross-border payment enhancements, which is something not only big for the acquirers, but also for the card networks. So innovations aim to reducing that cost and complexity of international payments. It's gaining the momentum. So a lot of discussions are happening with the card networks with regard to the cross-border payments. Yeah, these are the key trends in my eyes.
You think cards are in trouble because all of these alternative payment methods seem to be quicker, faster, cheaper, maybe easier, instant payments and whatnot. You think that the card schemes are considering that, okay, maybe this is the end of us when consumers have to still type in the 16-digit card number and OTP and whatnot instead of just scanning the QR code and get away with it?
No, they're a vital part of the ecosystem. And they will continue to be because the card network, let's admit that the card networks also, they are part of these innovations and they have boosted number of these innovations. This is why some of the innovations in the payments industry, it's also coming from the card networks to help acquirers, issuers, increase the acceptance rate from the consumers, to help consumers finding more convenient payment methods for their needs. So all of this together, there will be less reliance on 16 digits cards in the future. There will be more payment methods and more payment instruments available for the consumers and the merchants, where I think still the card networks will be part of it.
And good luck for the merchant to figure out which fits them and which is the best. Things are getting more and more complex.
Yes.
But this is what we are here for, obviously, to explain and help the merchants to make the right selections between the different payment methods, different fees, and see that what's the trade-off for the benefit. Mahmoud, is there something that we haven't talked about, but you think that we should definitely mention before we wrap up?
No, it's just really, we covered pretty much everything within the payments, what was happening, and what's the future. But yeah, I can see that it's a very bright future for the payments, and I can see that the card networks, the ecosystem, the regulators are really keeping an eye to make sure that it's more improved ecosystem for the payments for all of the players within the ecosystem, to make it, to enrich not only the economy, but to enrich also the customer experience when paying. I don't need to put all of these digits to make a payment. I don't need to still go to the store to make my payment. A lot of innovations are still on the way.
And I'm looking forward to this, of course. But
Yeah.
I think this is why it's important that we need to talk about these things, because innovation is happening so fast. And even if you are within the industry, you're just like looking around Monday to Tuesday, things can change so much. And to be on top of everything and understand how the system works and what is benefiting merchants and what is benefiting the providers, you just need to keep up to date with a lot of information, which is quite hard. So that's why we started the Soltesz Institute, to talk about these problems, to bring onto the surface even the bare minimum knowledge which might be missing from the vocabulary of a lot of people who are making decisions on payments and banking. So that's why it's important that we talk about these issues and we educate everyone, let alone be a user or the provider. So thank you so much, Mahmoud. We are just showing how we can reach you at the last page. So I'm confident if I say that you are welcoming questions in case that someone would like to follow up with you.
Yes,
Please.
any questions are more than welcome. Yeah, if any reach out is required as well, how we can help merchants, that's more than welcome.
And I would like to encourage everyone that ask the questions and challenge the status quo and try to get more knowledge about this industry, because the information somehow is so fragmented all over the place. It might be very hard to figure it out on your own. And it's important because at the end of the day, it is money.
Any questions are welcome. So yeah, please feel free to add your questions.
And thank you so much for everyone who watched us and helped us to create a more transparent and ethical industry. Until the next time, thank you so much, Mahmoud, for being here with us today.
I'll chat with you. Thank you. Thanks, Victoria.
Thank you.
Bye.